Hi guys, and welcome back to my channel Pips and Profits, and I hope you're comfortable and you're having a lovely weekend. Right, last week was a little crazy. We saw some unexpected moves in the market. We saw this on gold and a few other currencies like USD I would not want to delve so much into the fundamentals that caused it, but for gold, as you all know, during war, most investors would like to put their investments and assets into gold as it's more stable compared to any other currencies, the dollar inclusive. All right, so most investors will withdraw their profits or their investments from other places and deposit it into gold banks so that it is secure, which is the reason why you've seen the rally, the continuous rally of gold. Gold has done about 1,500 pips to the upside without retracing to at least an equilibrium level. Okay, so that's the major reason why gold is rallying. And for USD they are trying to peg their price points at around 150 Japanese yen. Okay, so if you've noticed in the past week, anytime the USD approaches the price mark of 150, there's usually a sharp rejection, okay, to the downside. So they want to keep their CPI to the barest minimum and to also improve consumer confidence in the market, right? So that is the reason why you've been seeing the rejection of the 150 mark on USJPY. Okay, so as usual, I always want to interpret the moves in the markets based on fundamentals and technicals. Okay, so for our technical analysis, we'll be checking out um, the dollar. As usual, if you've watched the past videos, you'll notice that the dollar, I've always screamed it, I've always said it, the dollar has been on a continuous uptrend. Okay, if you check in the past few weeks, I've already said it that the dollar has been in a continuous uptrend. Okay, so the dollar has been in a continuous uptrend since the past few months, about 3 months running now. So we expect that to continue going into the next week. Okay, now looking at the dollar on the weekly time frame so that we can stream it further downwards. All right, so looking at the dollar on the weekly time frame, last week we said we're expecting the dollar to give us some form of retracement into any of these levels. Okay, so as at now, as at last week, this just concluded week, we're not ready to go further long on the dollar, as we said in the previous video. Okay, so we expected to see the dollar trace into this level, which it has done, take out this high, which it has also done. Now we need it to move one more push to the downside, which is around here. There is a reason why we expect the dollar to trade back into this place. We're going to show you that on the daily time frame, and afterwards we expect the dollar to trade all the way up here. Okay, so if we look at the daily time frame, we're going to see some imbalances that we expect the dollar to fill before it continues its move to the upside. Okay, now looking at the dollar, you see that the dollar didn't really close quite below this low right here. The dollar couldn't close below here, so it's giving us somewhat of information that we may not be heading further downwards on the dollar, and we may resume our uptrend for the dollar. Okay, so for the past week, the dollar has been ranging. Fundamentally, there is no clear support for the dollar to move further upwards. So we've seen the serious range around these levels. Hopefully, going into the new week, what I want to see is the dollar breaking this high and trading above. Okay, so this is what I expect to see in the dollar going into next week, and expect to see it take out this high, retrace here, and then continue further upwards. Okay, so this is what I expect, something like this going into next week. Okay, so this is what I expect to see on the dollar. If we look at our hourly time frame, we didn't have much trades in just concluded weeks, just about a few trades we were able to take because the dollar is clearly in a range. This is the lower boundary and this is the upper boundary. No, not really, not that. Okay, so this is the boundary. This is the lower boundary, the upper boundary. The dollar has been trading in between this range all this while. Okay, from this up to this lower boundary. Okay, once the price breaks this boundaries, then we'll know the next direction for the dollar. Okay, so we're going to be looking at a few foreign currencies. Let's take a look at GBPUSD. and then we may look at Euro USD very briefly. Okay, so looking at GBP USD, let's look at it from the monthly time frame. Right, so from the monthly time frame, we are all bearish on GBP USD on the monthly time frame. I've reinstated that and I've done the analysis. You can watch previous video and you see where we analyze how GBP USD will continue trading further downwards up to this level, about 1.03718 levels. Okay, so clearly on the monthly time frame, GBP USD is very bearish, and on the weekly time frame, we can see that we are clearly bearish on GBP USD. Very bearish. GBP USD, in fact, has given the best of its retracement, trading into this fair value gap and an old low, an order block that is showing to the left hand side. So you can see that those levels have been mitigated. So we want to see GBP USD trade further downwards all the way to take out this low, this relatively equal lows right here, and this fair value gap and an order block on the weekly time frame. Okay, so we need to see take out this support and trade into this imbalance or fair value gap, as you may call it. Okay, so quickly let's look at the daily time frame also for GBP USD. Now looking at the daily time frame, you can see that GBP USD is also caught within a range. Okay, so I would like to use a very clear chart to explain that to you. So let's get a very clear chart. Okay, so for GBP USD, we want to see it break out of that range. Okay, so it's clearly in this range from here to here. Okay, this is the range GBP USD has been in. This is the upper boundary of the range. Whenever you see price form a swing or a range, when I mean a range, I don't mean the market just going sideways. I mean from an upper boundary to a lower boundary, that's a range of price. So GBP USD has been caught up within this range that's refused to go out of it. So to confirm our bias, we need to see the candle close above here to confirm that we are now going bullish on GBP USD. Somewhat of a retracement from the monthly time frame, or if it goes below and closes below this boundary, this lower boundary, that means we're going short on GBP USD in line with the monthly time frame. Okay, so right now there's some bit of indecision, so we may need the hourly time frames to give us direction in terms of clear market structure. I prefer the 1 hour time frame, which I use. I want to see very clear structure on the 1 hour time frame to follow my decision on how to trade within that range. Okay, so because the market is in a range, I know we may have itchy fingers, so this is what I do. I usually mark out my highs and my lows. Currently, if you look at the structure on the 1 hour time frame, you can see that we've been trending downwards all the way to these levels. Okay, take out this liquidity, price did so on Thursday, and maybe going into next week I want to see price trade downwards into this order block right here. So I want to see price trade all the way to this level going into next week. All right, and afterwards then we may see another push back to the upside because price is still within this range, and until price closes below here, then we'll confirm our move. But for now, GBP USD is in this range, and we expect to continue trading it as it's in a range until it breaks out of it. Then we'll continue to take the trend. Same thing applies to Euro USD, right, and a few other foreign currencies. For USD JPY, it's been caught up in a range, a very clear range, and some fundamentals backing it includes the Japanese pegging of their price. You can see the price rejection right here off the 150 mark. Another rejection again, very close to the 150 mark right here. So there's been strong rejection, and this is fundamentally backed. So we may be seeing USD JPY trade further downwards if nothing happens. Okay, so this was the first rejection off the 150 mark, was the first, then this was the second rejection, and the third rejection. So within a couple of few weeks, within about 2 weeks, there's been 3 rejections of the 150 mark on USD JPY. Okay, so it's safe to just wait and watch and see. This is fundamentally backed, so you don't know what may happen anytime. This kind of news releases are not usually scheduled we just see them happen. They are like black swan events. No one knows when they're going to happen. So it's best to just stay out if this is your preferred pair. If not, you could check out other pairs that you can trade and wait until price has broken the 150 mark or show new structure, clear structure to the downside. Then we'll know that that 150 mark is going to be respected in the long term. Okay, so with that being said, come to the end of this video. I know you enjoyed this video, so please do like, share and subscribe to this channel for more updates like this. If there are any concepts that I've mentioned or used that you're not familiar with, you can drop a comment in the comment section and I'll make a video explaining that. This is my service to you and I'm giving back as much as I can. Okay, until we meet again, maybe midweek or next week. Midweek, I'm going to drop a very interesting video that I think all of you should watch and take advantage of. Okay, so until we meet midweek, I wish you good luck and good trading. Cheers and God bless, guys.